rate of interest by RBI at a time where prices of all kind are rising. So basically there is an increase in inflation. Secondly, even if the RBI has increased the repo rate by 40 basis point, why few banks have already started increasing their rates by 50 basis point to maybe 75 basis points. So quickly we will like to address both these topics in this particular video. First, RBI has increased the repo rate by 40 basis point to control the inflation. So whenever there is increase in inflation, to control inflation, sometimes RBI do take steps to increase the repo rate. In this way, interest rates will increase, people will borrow less, they will spend less, and this will in turn help in controlling the liquidity in the system. Now coming to the second point, even if the RBI has increased the repo rate by only 40 basis point, already few banks have started increasing their interest rates by 50 basis points, 75 basis points, or we can see there a little more increase in coming few days. The reason for this is that there is not only increase in repo rate by RBI, there is also increase in CRR by RBI. So RBI has also increased CRR by almost 50 basis point, and this in turn will take away around 87,000 crore liquidity from the system. How it will take away? CRR is basically a liquidity which banks need to park with RBI. So if with the increase in 50 basis point, now banks will need to park more liquidity with the bank. This in turn will increase the interest rates. Bank will need to increase their margin on the lending rates, and this in turn will increase the overall interest rate. So there is a double effect on the increase in interest rate. First is repo rate by 40 basis point. Secondly, increase in CRR by almost 50 basis point by RBI. So basically, we have seen that during once in March 20 around, there was a reduction in both repo rate and CRR. So there's a reason. While we had enjoyed, customers has enjoyed the benefit of low interest rate during that time, it was because of double effect. Banks have also reduced their margin, and also there was a decrease in the repo rate. Similarly, now we can see going forward, there will be a double effect on the increase in interest rate as well. Also, to all our customers, we want to inform that if you are planning to borrow any kind of money, this could be a right time, because still few bankers have not started increasing their margins, but sooner than later they will also follow the other banks. And also RBI governor has already indicated that increasing interest rates in the coming monetary policy will not be a no-brainer. We had already seen that in May there was a one-off kind of meeting RBI held, and they had increased the interest rates because they never wanted to increase the interest rates at one go, and that's why we had already seen an increase in the rates by 40 basis point. And coming monetary policy, maybe which will be held in the month of June, we will again see a rise in interest rates. So if you are planning to borrow any kind of money, this could be the right time, because effect on repo rate nobody can avoid, but still there are few banks which have not increased their margins, which they will increase sooner than later. Before they do that, avail the benefit. For any kind of requirement, funding requirement, you can reach out to Team FinDestination. We are always happy to assist you. Thank you.